Good morning, everyone. How you doing today? Happy Memorial Day. As mentioned in the daily financial news, we have the one and only Greg Dickerson with us this morning. How you doing, sir?
Doing great, Michael. How are you?
I'm doing very well. Let's get this important thing out of the way first. As you have shared in your story, you served in the military for a few years after high school. So on Memorial Day, we all thank you for your service.
Yeah, thank you very much. And thank you to everybody out there who has served and is serving. Everybody in my family, all the men in my family all served. And my grandfather was a Pearl Harbor survivor. He was in the Army at Pearl Harbor when it was attacked, and
Oh
he
wow!
survived that. Yeah.
Ah, runs a long way. Both my parents served. It's actually where they met, and obviously, I'm glad they did. So thanks, mom. Thanks,
Hmm.
dad, for serving.
You
Uh,
probably wouldn't be here if they didn't.
yeah, I think that's how it works. Yeah, I don't think I would be here if they hadn't met thanks to the military service. So, go mom, go dad. What I thought I would do in this first episode, folks, because if you don't know yet, we talk to experts Sunday through Friday, and we always attack three different topics. The first topic, Greg, I think is one a lot of people are asking themselves. I've spent a lot of time this weekend thinking about, and that
Hmm.
is how long can single family homes stay hot? I think we need to
Hmm.
define the word hot, but let me just take a pause. And when I ask you that, what are the first couple things that come to mind?
Yeah. So first off, we always qualify this with, real estate is hyper local. So every market's different. There are still markets right now where you can't give away houses for free. And there's markets where you can't find a house at any price. So, you got to qualify that with where are the hot markets. And
Mhm.
there are certain markets that are just red hot right now where you can't find a place to rent. You can't find a place to buy,
Mhm.
inventory all the way down. And that's a lot of markets in Florida because they've got a lot of influx of people.
Mhm.
Some of the markets in Tennessee, Nashville is red hot right now. Arizona, um, what else is Nevada? So a lot of areas like that where a lot of people are moving. So when you say, red hot housing market, what I'm thinking is, obviously it's supply and demand. So there's no
Mhm.
inventory.
Mhm.
And prices are at all-time highs right now. But again, it's all a function of the financing. So
Yeah.
how long can the market stay hot? As long as the rates stay low.
Yeah, I think a lot, it's pretty funny. I think you're right on that, right? When I thought about these things, I actually came up with six categories to think about. And one of them, actually number two I wrote on the list, and it's probably the most important, is low rates, right? If you
Mhm.
if you could tell me today when the 30-year mortgage will be 5%, I can tell you when the housing market will slow down, right? It's kind of that simple equation, because you go from a 3% to a 5%. That takes a lot of would-be yes answers and turns them no. That dramatically slows down demand, and when you slow down demand, supply builds, and over time, price elasticity, prices adjust. So
Mhm.
I think interest rates is the most acute. I mean, again, if tomorrow the market opened and the bond market, the 10 years shot up from 1.6 to 3.6, I'm not saying it will, but if it did, that would stop housing almost immediately in its tracks.
Yeah. And you see it every time. You see it in the news every time. Every time market rates tick up just a little bit, mortgage applications drop. So
Mhm.
everybody, I'll give you the best way to think about this. So it's two things. It's the rates, number one, the level of the rates. Number two, it's the availability of the money, the liquidity.
Yes.
So as lending requirements strengthen and weaken, remember after 0809, man, the requirements went through the roof in terms of what you needed to be able to get a loan.
Yeah.
So that affected things and affected the market. And then, since then they've started loosening requirements, and we even saw, balance sheet loans
Hmm.
and small business income loans. So if you had a small business and you didn't have the tax returns to qualify for a loan, they would look at your bank statements, but those are higher interest rates. So these creative loan products started coming around again, here in the last number of years, to where it's easier to borrow money, but it's more expensive. If you want the best rates, then you got to have a good credit score, you got to have a good down payment, those types of things. And if the property doesn't appraise, you got to make up the difference. So
Yeah.
there's some things there. But the best way to think about this is just like the retail world. When is the last time you bought something that wasn't on sale?
Yeah.
I
Yeah.
don't buy anything at retail anymore. I
Mm.
wait for the sales.
Yeah.
Interest rates are the same way. People are very tuned in. People that are in the market
Hmm.
are very tuned into interest rates, and they've got a number that they're looking at. Number one, because it's largely based on your ability to qualify. And number two, it's a mental threshold, right?
Yep.
Used to be 5%. then it was 4%. Now it's 3%.
Yeah.
People are, if
Yeah.
rates get up over 3%, 3.5%, man, people just stop.
They
It's
get
really
grouchy.
interesting. Yeah. Yeah. It's just really, really interesting. And, so what's going to, what would tank the market ultimately? When you say tank the market, that will stop the demand for
Right.
mortgages. And
Right.
what's the demand for mortgages? That's buyers. So we say tank the market. That's what that means. 5% is the number. You start getting over into the 4s and up near the 5s, you're done.
Yeah, I think that's right. I think 5% is the number. And again, we got to be very clear, because a lot of people might take this as we're calling for a crash. We are not calling for a
No.
crash, right? This would be a demand slowdown. We're not even calling for 5%. We're just looking out, going, what could cause this to get less hot? I'll just run through the other 5 just because I have them. The other thing I think that's important is, I think this cycle is the first event in my lifetime, which is nearly 5 decades, that actually changed consumer behavior.
Mm-hmm.
Right? The dot-com really didn't change it. Great Recession really didn't change it. This one did. And what I mean by that is the home is looked at differently, right? I started saying space is good. Mom and dad want that extra bedroom for their office. They want a backyard to kick their kids outside or let the dog run around, right? It's people are looking for the home, and they're the move to the suburbs, tall urban structures out, urban or suburbia good. I think that's a trend that probably continues. What do you think?
Well, that depends. So people are going back to the cities now,
Mm-hmm.
now that things are open back up. So the
Yep.
key there was lifestyle. And what people were looking at was, hey, I go to the city for the lifestyle,
Mm-hmm.
for the amenities, for the entertainment, those types of things. And when that was shut down, people left the cities. And, a lot of it is the political environment and the homeless environment and things
Yeah.
like that in some cities, where you've got this homeless population that's just expanding. That's driving people out. You've got the political environment where they're not enforcing laws. That's driving people out. And then you had, like in New York, it was just a shutdown of the entertainment. So people were like, I pay a premium to live in New York for the amenities.
Mm-hmm.
So once the amenities were gone, people just left New York. So now that they're open, people are coming back. So the greatest cities, in this country, they're not going anywhere.
No,
people aren't going to leave
clearly.
en masse. And a lot of it's age, right? So millennials love cities, but then there's older generations that love cities too, that, were raised in the cities and things like that. But yes, you are seeing huge escape to the suburbs. Again, Arizona, some Colorado, Arizona, Nevada, Tennessee,
Utah.
and Florida.
Yeah.
You're seeing people, Utah, you're seeing people, head to those places in mass. And, all you got to do is go to U-Haul,
Yeah,
a moving
exactly.
truck company, and just track their moving data, and you'll see where people are going. And it's really interesting. So that is still a trend, but cities aren't going anywhere.
No.
The city thing is, especially the big cities.
Yeah, I think the big cities will be back. They're just going to be different. I do think there's a contingent of folks that maybe always thought that they'd eventually go to the suburbs when they wanted kids and whatnot, and they've just kind of pulled that that set of folks forward.
Yeah.
I
And
think
here's what we do know. So the big, pontification, last year when this was all going down, and it's been a year. Isn't that crazy?
Yeah, it's crazy.
Yes. It's been such a fast year. Maybe for a lot of people listening, it hasn't been such a fast year, but for me, unbelievable how fast this year's gone with the pandemic. But what'd you see this weekend? You saw the, what was that race where 150 something thousand people,
Indy 500.
Yeah, Daytona 500.
Or,
is that what it was?
I think it was Indy 500.
Indy 500. Yeah, just people back 100. That's the biggest event since the pandemic.
Yeah.
No masks, everybody there, right? And probably half of them aren't vaccinated. So we always wondered how quick people would be to go back. Now, here's the interesting thing. I went to the movies last couple of weekends since the theaters opened up. We like to go every weekend. Still hardly anybody in the theaters. They're not that many people going back to theaters yet, but that's largely because there's not really great movies. Mm-hmm. Although we saw Cruella this weekend, and for those of you watching, that was a killer movie.
Yeah. Okay. Look at that movie.
It was a good movie, Cruella. So anyways, long story short, people are traveling, people are back out. So people aren't scared. So we're going to see, the economy start to recover in that sense. And people get back to work. So it's really interesting how short our memories can be with things. So that's the moral of the story. That's all that, long way to get around to just saying we have short-term memories in this country. 08, 09, biggest housing collapse in the history of the world. We're kind of back to some dangerous ground again,
I think there's two more things I'll just lump together, and those are kind of generational things. First off, Barry Habib brought this up to me when we talked. Millennials are of that age now that they're right at 33, which is the first time homebuyer age. I think it's interesting for the next several years. The number of 33-year-olds actually increase, which I think is a good sign for first-time homebuyers. And then on the other end, baby boomers are increasingly aging in place, right? Historical norms that we've been told about is, oh, the baby boomers, they're going to sell their big ass houses that don't have any kids and move to wherever. More and more baby boomers are aging in place for a decade longer than past generations. So there's generational trends going on right now.
Yeah,
that kind
they're
of
living
support.
longer. Home health care is and home, assisted living, and things like that are creating opportunities for people to stay in their houses longer. And, my mom just recently sold, she's in her 70s, and so, classic example. I mean, I told her to sell, when my dad passed away a number of years ago, but she stayed and could have stayed longer if she wanted to.
Yeah. And then the last two, we'll just talk about, just finish off the six. Builders. This is actually an area, I think that's going to be topic number 3 for us today. But builders, they've, I mean, if you believe the media, they've been underbuilding for 10 years. And a lot of, at least the public builders right now, are slowing down, right? On
Yeah. Well, we
purpose.
can save that for segment 3 to talk about it, but the millennial thing too. So that's what's driving the market. So millennials are the ones, because they're like you said, they're reaching that age, they're getting out, and they're having kids. So they want that yard, they want that picket fence. And, that's who's driving the market right now in purchase power. And, for them, they don't understand what can happen to a housing market because they didn't go through it. So paying what they're paying now, their mindset is, at least the feedback I get a lot of times in my videos are, the market's just going to keep going up. If you look at where prices were, 50 years ago, 100 years ago, compared to now. But you got to remember, we're in a boom cycle right now. 08, 09 wiped out 50% or more of the values of housing. And it took, 11 years to come back from that to where the houses just started getting back to where they were 04, 05 before the crash. So a lot of people just don't realize that. They don't look at the trends, and they don't go back and look at that. And they don't feel like housing can come down from where it is now. So it's going to be really interesting to see. And that was a question I put in one of my videos, is if you just recently bought a house and you're paying retail all-time highs for it, how are you going to feel when that house in 6 months, and I'm not saying this will happen, but let's just say it did, in 6 months is worth half of what it is now? How do you feel about it then? I mean, what's your mindset? That's all I'm just saying. What would your thought process be then? Is it, so it'll be interesting to see when it happens, because it's going to happen when rates go up, housing values go down. It's just the cycle of the, the market, how people will feel about their value of their house at that time.
Yeah, we can definitely dive into that a little bit more. Let's just close off my list of 6, and that is Wall Street and investors that follow one rental at a time, right? We are picking off more and more affordable homes. And I actually interviewed somebody who's been in the business, data business of real estate for several decades. And he's like, Michael, people don't understand. When Wall Street buys one of these affordable homes, it's off the market forever, right? 10 years ago, people were thinking, oh, Wall Street, they bought them at a discount. They'll wrap them, they'll sell them. When's Wall Street going to sell was a very common conversation. And my buddy's like, Michael, they're never going to sell. Most of those guys don't have any money in the deal, and they're producing 6, 8, 9% yields. Why would they sell? So I just think that's interesting, is Wall Street picks up more and more homes. They these iBuyers like Redfin and Zillow, they're just feeding Wall Street. It's funny to think about. Wall Street now owns less than 1% of single family homes. What happens if they get to 6 or 7%? That's a lot less supply of available affordable homes.
Yeah. And, they used to be the mortgage holders. Now they're the owners. So it just makes sense, because they're, it's annuity. They're looking for long-term income, and it makes a lot of sense. So there's a niche there. And I don't know what the, market cap of the housing in this country is. I have no clue what the overall value of all the houses in the country are, but they could control a good percentage of it, but not enough to make a big enough dent to where it's really going to affect things right now. And it would take a long time, for them to be able to accumulate enough that would make a serious dent overall. But, it's very interesting. And, again, what drives the housing market? Number one is finance. Number one, without the finance, you don't have a deal. And, the government participation in that, backing up and guaranteeing those loans, driving interest rate action, which drives price action, which drives demand action. That's really the key to the housing market. It always has been, and it's been through the history of time. But when you go back to the beginning, to now, housing has always gone up, and it's always been a good steady, 10% of a year of appreciation over the history of the housing market. So interesting times.
So back to the kind of topic at hand, when will housing slow down, or how long will housing stay hot? Again, I think there's enough. There's generational movement, there's builder lack of supply, there's Wall Street demand. I think it goes back to when does the 30-year hit 5%? And my crystal ball is really fuzzy about next week. It's extremely fuzzy about next year and the years after, but I don't see 30-year fixed rate financing at 5% for years to come. So I think the housing market is hot. I think it slows down, right? I think the last numbers from Case-Shiller were like 12%. I think it could slow down to 7 or 8% and then slow down to 4 or 5% and slow down to 2 or 3%. So I don't see 5% 30-year mortgage for several years. What do you think?
Yeah, it's interesting, and I think we've debunked the housing crash predictions that everybody was making.
I hope
earlier in the year and last year, talking about this housing crash because of forbearance and all that kind of stuff. And hey, forbearance is over. The programs are being lifted. Yep. Everybody's getting back to work, and guess what? There's no wave of foreclosures hitting the market.
There's just not. Well, Greg, this has been a lot of fun. Do me a favor, give your YouTube channel a plug, man. You are doing some great stuff there. Yeah,
awesome. Thank you. Yeah, gregdickerson.com. And for everybody listening who's interested in Bitcoin and cryptocurrency, I've been in that market playing with it, since, I don't know, probably, 2021, probably for the last 5 years when I first became aware of it, and, in and out studying it. So I'm starting to make content on that as well to kind of give people the perspective of the market, what's going on. And I don't talk about, specific, currencies and this, that, and the other. I talk about Bitcoin and the market as a whole. So that's been getting a lot of traction. People are really enjoying that. So gregdickerson.com, that's my website, YouTube channel, podcast is all on there.
Very cool. Thank you very much, Greg.